Hey guys, this is Hood Talk. This is Brian Jones. I'm here with professional trader and world's most interesting man, Chris Hood. How you doing this morning, Chris?
I'm doing great. The beard's gone. My face is feeling the air. I
You
just wish
have,
it was a bit warmer, man.
you have a face. I didn't know you had one.
I didn't know either. It's been a long time since I've seen this chin. My wife said I looked like a chipmunk when I smiled with the beard. She said it just sort of gave my face an extra 5 inches. So,
I'm,
it's
I'm
a
trying to
it's my
make the
Christmas present.
decision. Sorry, I'm trying to make the decision on mine. It's like it's cold outside, and I don't know if I should cut it off. It's getting a little bit long. It's getting sweat in it when I do jiu-jitsu. It's like it collects food.
I think that whole jiu-jitsu thing, when your chin has got that soft stubble on, the hard stubble, and you put it in someone's eyeball, that's a
Yeah.
great submission, man. That's a
Oh,
great.
you're one of those guys. You're like the old, like the chin in the eye socket. Like, let me
This
see
is
if I
the
can.
old school, man.
Yeah. Okay. No, I get it. I get it.
We
I,
don't do no perms in this school, man. We do the proper stuff. No, wait. I
Perfect.
think I think once you hit 40, all of that fancy stuff with the rubber guard and stuff. If I do rubber guard, I'm going to be in the ER for a week just trying
I,
to get my legs straight.
I
Uh,
understand. I
yeah.
understand. Having done jiu-jitsu for a long time, I think the longer I do it, and this is probably the same with your trading, is the longer you do it, the more simplified your
Oh
system
yeah.
becomes.
I mean, I remember when shout out to Sergio Penna in Vegas when I was there. He said to me, "We don't do that rubber guard stuff," and I was like, "Why not? Everyone's doing it. No gi." He's like, "You got to do jujitsu early in your life. That's going to be the same when you're old. You can't be changing your style later on. I mean, could you imagine Helio Gracie trying to do, Eddie Bravo's truck, and he's trying to do all those weird positions? He'll pop. I mean,
Yeah.
that's it's crazy stuff,
It's
man.
it's it's a lot of that stuff is attribute based. I mean, I'm not taking anything away from the grapplers that do that because they're really amazing. But I used to do a lot of things when I was younger that would get me hurt now.
Oh yeah. And
Like,
I think when you say attribute based, it's absolute. I mean, you take these guys that are really good at no gi, fantastic. But when they're 65 and they're all suffering from torn ACLs and they've got bad backs and they've got, they can't do anything and then they have to go and relearn a pressure system. That at least the nice thing about pressure jiu-jitsu is it doesn't matter if you're 12 or 72, you can still do the same thing. My little guy is 8. And he, when he was at Sergio's gym, Sergio was teaching him the 100 kilo, right? The sort of, heavy side control. When he
uh-huh.
puts me in side control at night when I'm putting him to bed, he's like, Dad, come here. He puts his arm under my head and his shoulder fits perfectly into this little spot. Man, I can't move. There's no way. He's like, Dad, don't use your hands. Can you move? I'm like, no, it's impossible. Pressure-based game. Give it to the
The-
youngster.
for sure, for sure. And I got a couple of questions I want to ask you.
Yeah.
Let's just get a. So what's the market doing? Today's the 15th. It looks like the futures are up. The pre-market looks pretty good.
Pre-market looks good. This Friday we have quadruple witching. So we've got the futures all expiring. We've got the monthlies expiring. There's all this stuff sort of converging on Friday. And the big news is obviously the Tesla edition that happens on the 21st. So there's this huge sort of overhang sitting on that stock. I can see though, the news this week was predominantly bearish on Tesla. Surprise, surprise. They had to shut down their production plant in California for a couple of days. But that's normal. In the car industry, that they do that anyway. But there's definitely a sentiment swing. I think a lot of people are a lot more conscious about, Tesla going into the S&P. Market volatility is going to go up. I mean, that stock is just volatility with a capital V. I mean, it's crazy. And a lot of the big brokerage houses, little asterisks over there, don't buy everything that they sell, are saying, don't load up on the stock. And, it's probably the best advice that I've heard. The way to play Tesla is definitely the way that we've been doing it, right? Which is taking very, very cheap, out of the money butterfly trades and laddering them up. And if you can nail them even before expiry on a 3 times or a 4 times return, that's a much better bet than buying the stock, holding it and hoping it continues to become stratospheric. It's just, a lot of the guys are coming out now and saying, under normal circumstances, when you compare car manufacturers, how is it possible that a car manufacturer who delivers 500,000 cars a year is valued more than all the other car manufacturers added together who are producing and delivering millions of cars per year. So, I think there's going to be some sort of reality check that comes in. And the scary part about it is, I don't think the smart money is going into the stock. I really don't. I think it's going to be the retail guys that are going in going, oh, I missed out because my buddy Jack over here told me at the barbecue, he bought Tesla at 18 and look at how much money he's got. So I better catch this wagon while I can.
So,
And I
so
think
do you think that's what's driving the market up right now? Do you think there's just an exuberance of sentiment maybe?
There's always
the stimulus, the
Yeah.
coronavirus vaccine that's out, Pfizer distributing a vaccine.
Here's the thing. I think with interest rates being so low, and we have it here in Canada as well, there is no alternative, right? In Canada, they've accumulated this huge cash hoard. People have been saving over the coronavirus time because they don't know what's going to happen next. So there's this huge amount of money. Interest rates are at record lows. No one's going to be raising interest rates anytime soon with all the amount of debt that they've produced. I mean, could you imagine if the government decided to raise interest rates on this huge debt pile that they've done, and they said, oh, it's hard enough to pay it off anyway, let's just make it harder. So I think that's the big issue, is in the absence of alternatives, people will treat the market like a casino. And that's what's happening. And you've got brokerage firms that are making it far easier for people with no knowledge to actually start trading. I mean, here's an interesting thing. I think I mentioned a couple of weeks ago that I touched an ad on Facebook. Just touched an ad. I think I was looking for something and I might have touched
clicks that opens 9 windows. Yeah.
Oh my God, Brian, I have had maybe 40, maybe 50 of these experts, in my feed now. And they just constantly bombarding me with how simple and easy and great their system is relative to whatever. And, I haven't taken the plunge to test any of them yet, but looking at the advertising and the way that it's sold,
right,
it can only appeal to the greed in us, right? So you have a lot of people who are sitting back going, well, if this looks so easy, why don't I do it? And that's the problem that we have in the market, is that people are dumbing it down, making it look a lot easier than it is. And the market is not a value creator. This is the irony of it. It's not a value creator. It's designed to take money from the stupid people and put it into the hands of the smart people. That's it. There's no value created. So it's a zero-sum game. Now, if you're going to be part of the smart people, I can guarantee you, reading one book on options trading on a Saturday is not going to put you into the category of the smart. It's going to keep you in the market of the dumb. And I'll tell you why. Because everyone else is reading the same material and everyone else is doing the same things. One of the things that I find really interesting is when we see stops getting taken out in the market. And you can see it on charts, right? You can see that if someone's shorting a share, usually the stops are going to be put in because everyone reads the same book, right? So everyone knows that the stop of that short is the previous high of the previous candle, right? So
the algos are taking out those stops.
They hunt these people.
Yeah.
These people, I'm from Africa, right? So, imagine the Serengeti. And you've got the lions and you've got all these predators that are going around, and you've got all the buck, the gazelle, the guy that doesn't really have anything except a white bum, right? There's a little buck there that we have, an impala. It's got a little white bum and it looks like an M. And we used to call that the McDonald's of the wild because it was just all over the place, right? These buck are like a dime a dozen. Those buck are the same as retail traders, the same. They are easy to find. They are obvious. The predators just go after the slowest in the bunch, which is the guy who read the book and said, but I did it all the same. I did it. I followed the rules.
Those are the stupid retail traders.
There we go.
Right.
Not the intelligent ones. So the irony of this is, and I have to put a little disclaimer, is I was one of those guys. So I've been there. I was mauled by these lions. Mauled. And then I used to look at this and I go, but I did it exactly the way the book says. The problem is the book is wrong. And you don't get to learn on a piece of paper. You learn for real. And that's why I encourage all my clients. Paper trade first, understand execution, understand how the trade works. Once you've got that, now you might have a little bit of smarts. Then you've got to understand how the market works. The market is driven by two things and two things only: greed and fear. Those are the only two things that motivate sellers and buyers: greed and fear. Buyers are motivated by greed, sellers are motivated by fear. That's it. There's nothing else. And if you can measure and you can see by the charts whether greed is dominating or fear is dominating, you'll understand how trades work. And this is what books don't tell you, because you have to be in it to see it. So these guys, these adverts that are coming across on Facebook, oh my God. Some of these guys, the funny thing is, these guys are renting Maseratis and borrowing their friends' apartments and pretending it's theirs and saying, look what I get on 15 minutes a day. You can also have a Maserati. It's so easy. Problem is, it's not. You know, and a lot of people are taking hard-earned stimulus money and, you know, free money that they've got, and they're putting it down in this casino called the market. And, you know, they hope and pray that things work out. And I hope and pray that they don't lose their pants. But the irony is they will. And, you know, you can't stop. I think this is the hard realization in life. No matter what you tell people, greed and fear will dominate. So if someone is a naturally greedy person, it doesn't matter what I say, because greed will dominate and he'll go and do stupid things and he'll lose money and, you know, come back. And you've got to really, you know, you've got to deal with that. And I think if people go into the market without dealing with those two emotions, you're setting yourself up to fail. Yeah, you'll win one or two trades every now and then. You'll convince yourself that you're skillful, but you actually.
Do you think this is why most people wash out really quickly or blow up their accounts really quickly?
Oh yeah, people blow up their accounts not because they, you know, people who know what they're doing in terms of allocation, in terms of trade setups, in terms of having a plan to exit. They know what they're expecting, right? People who blow up their accounts don't have a plan, don't know what the trade's going to do, have no understanding of risk. They look only at the return probability, not the probability, the return potential of a trade, and they size it based on that. So they'll go in and say, oh, take a call butterfly, for example. I put down $90 and I've got a maximum gain of 900. If I put down $900, I've got a maximum gain of 9,000. What will the dumb trader do? The dumb trader will go in and put $900 down. Doesn't realize that I've only got a 2 or 3% chance of hitting that goal. And he won't get out when he's got a 4-time return or a 2-time return because he's greedy. He says, no, I want the 10. I want the 10x. I think in my 20 years of doing this, I've hardly ever got a 10x. I think I can count them on maybe one hand. But the art of doing those trades is getting out before you make the 10x for a 5. Right. No one goes bankrupt making 100%. You know, like this is the funny thing. No one goes poor. No one gets to be poor if you do that. But the greedy guy will stay in.
The emotional control part of it is something that I think I learned a lot about myself in, say, like the first 6 months.
Yeah.
And I think you probably can speak to this as you've been doing jiu-jitsu for a long time, but being a martial artist has really helped me with trading, because I don't get rattled easily by things. And I understand when I'm experiencing a certain emotion like panic or fear or whatever, and you have to kind of keep that in check. Do you think that has helped you in your trading?
Oh yeah, I think. Look, I think having some big 300-pounder sit on your face. I think the panic when you have, you know, someone in north, he's in north-south, and you just, you know, you're looking up and it's a horrible sight.
Nothing but chest hair.
Yeah, the hairy chest, or, you know, the whole idea of getting choked out by some big guy.
Getting waterboarded with their t-shirt. It's like
panic is different. Yeah. I think the panic with money, the problem is that people don't learn easily. So what happens is this: they'll lose money, and you'll have two reactions. You're either going to be so scared off, you're never going to trade again, right? So that's one extreme reaction. I know a couple of people who did that. Or the other reaction is they go, you know what? I'm going to double down. I've just lost 100, so I'm going to throw 200 in to make it up. And then they double down, and then they double down again. And within 4 double downs, they've blown it out, right? So the one guy goes, no, I'm never coming back. and he goes off to the side. The other guy goes, I'm sticking in because I'm brave. Look at me, blah, blah, blah. Doubles up and he blows up his account.
It's an ego thing. They don't want to admit.
Absolutely. So how do you cure this thing is that the reason people react that way is they didn't understand allocation to begin with. So they didn't know that when you buy a call option, for example, they didn't understand that call options are designed to go to zero. That's it. They will be zero at the end of expiry. They will be worth nothing. So the option will be worth nothing. But if the stock has moved in the direction that you want it to be, there will be some value. There will be some intrinsic value on that option, right? The problem is a lot of people who come into the planning, or a lot of people that start trading don't have plans. So they just randomly do shit. I mean, I saw some guys from Robinhood just buying out of the money calls. Like, why would you do that? I had a couple of guys come over to me and they've lost some money and they want to get better. Why did you want to do that? Oh, we thought that buying out of the money calls would work. Yeah, the problem is if you're doing that without looking at momentum, trend, chart setup, is there a catalytic event? Is there something that's going to push the stock up? What you're doing is you're going to a roulette table and going, what, I'm just going to throw it on 00 or 0, whatever it is, and see what
all black, all or nothing.
Yeah, all or nothing. So it's about approaching this intelligently. So one of the things, and you'll remember this, I never say to clients, try and get your first week that you're trading, hit the goal that you want. You don't do that. You gauge how the market is. You add one trade. Were you successful? Yes. Okay. Add another one. Okay. I was good there. Okay. Add another one until you hit your allotment. And then you can manage each position. You don't just go, oh, I've got 20 grand. Let me throw the 20 grand on and see what sticks. That's just going to be stupid. So a lot of people don't take the time to plan, to understand themselves, to test themselves. When I say to clients, you've got a paper trade, a lot of people don't do it because they're greedy. They want to get in now. I'm missing the boat. There'll never be another day like today. The funny thing is the market's always going to be there. It's been there for years. It's going to be there tomorrow. And taking an extra day or an extra 2 weeks or 30 days is not going to
figure out what you're doing. Take a little time
to change things. So with the paper trading, it's such an important part of the psychology of trading as opposed to the trading itself. It's to understand you. For me, with clients, it's like, I don't really know who you are until I see you trade. So trade on paper. Trading on paper isn't going to have the exact same emotional feel as if you were trading with real money. But I get a sense of whether or not you're a panicker, whether you're an aggressive, I take all kinds of risk kind of person. And then you can actually start adjusting the types of trades to fit the personality of the person. So if someone is not a risk taker, they shouldn't be doing naked puts. Just stop doing them. Because if the market does correct, the way you will react to it is, oh shit. You're not going to understand how to get out. You're going to go, I need to close the trade. I need to do something. And then all of a sudden, reversion to the mean. You've already exited and lost money. Oh, but my trade would have worked. Oh, so all of a sudden that panic that's set in on the market correction actually could have worked in your favor if you'd just done nothing. So understanding those trades and the personality is really important.
I can kind of speak to that from personal experience. So like the first say month I was trading, I got started and the market was clipping really well, and I knew one thing, you've got your one technique. And of course I didn't listen to you about allocation. That's when the coronavirus thing just destroyed all of my spreads on SPY. And I lost like a third of my account. Yeah, in one day. And I was like, am I going to stop? No, I'm just not going to do that again. Because I'm still in the fight. I still have capital in that. I'm not going to quit. I'm not going to double down or revenge trade or do all those other things that those things have never worked in any field of my entire life. So why would they work?
Can you imagine applying a revenge trade mindset to a jiu-jitsu match?
Oh man.
You just heel hooked me. I'm going to come in now and give you my other leg, and then I'm going to see what you're doing.
Yeah, let's go again. Like again. And you just keep getting beaten until you look. like the biggest fool of all time in front of everyone.
I had one experience with a white belt, a new guy coming into a club once, and obviously I had the silver beard and everything, and he's like, I want to take on the old guy, and it was a big dude, and I remember rolling with the guy, and he was a good athlete, pretty big guy, about 6'4", maybe 250, 240.
Little ego in there.
Yeah, he was big, and the guy couldn't move. So obviously, in jiu-jitsu, it's a learned skill, the ability to move, right? So I'm underneath the guy, and I said, look, I'm going to put my hands in my belt because I want you to understand that I don't need my hands, right? So I put my hands in my belt. This guy's there. I'm tripoding the guy. So he's sort of flying like a flying baby on my feet. And I look at him and I go, you know what? Just do what you naturally want to do. And he looks at me, and you're going to have to beep this one out. But he looks at me and goes, I want to punch you in the fucking face. I was like, yeah, okay, just don't do that. I mean, the guy had hands the size of a car. I mean,
right. But that wouldn't have worked either. That would have just made it worse on him, probably.
Yeah. But this is the problem that trading does. Trading often brings out your basic instinct, right? And you have to have a set of rules and a checklist and everything to control that piece, because it's almost like an amygdalic response, right? It's like it goes into this primal part of your brain, and the fear and the greed thing starts to trigger, and then
monkey brain going wild.
Yeah.
He's like
caveman brain.
Like Zoolander when they're like files are in the computer, and he's like they're playing this 2001: A Space Odyssey music, and they're banging on the.
Well, here's the funny thing, right? Have you ever heard of that experiment that they did a couple of years ago where they gave a monkey some darts, and they put all the stock listings of the New York Stock Exchange on a wall? They took two really good fund managers and put them there, and they applied all these models and everything. And they took this primate, gave him some darts, and he threw them at the wall. And whatever the darts landed on, they would buy the stock. The monkey outperformed the brains. It's the same. I used to have a theory that you could take a chicken from a farm, you could put some feed on your keyboard, and the chicken would hit these keys and it would create stock codes, and you just buy those, right? So there's this primal thing that happens in our brain whenever we trade, because money is real, and it's tapping into your reaction to it. So the only way you can actually get over that is if I sit with someone and say, okay, if I took $200 right now and flushed it down the toilet, how would you feel? And if you go, okay, $200 too much. If I did 150 and I flushed it down the toilet, how would you feel? And you go, no, that's okay. Cool. That's the size of the position you should trade. And it's such a simple exercise, but it works. Because as soon as you become nonchalant about it, when I do a trade, I'm under the impression I'm going to lose 100% of it. So I size everything small. I think in my account, I have over 100 positions, but none of them are big, because I know that not all of them are going to lose. And some of them are going to do really well. Some of them are going to do crap. And some of them are going to be middle of the road. Mm-hmm. It's having that spread of return that makes it successful as well. So you can't really build a winning portfolio unless you have volume. That volume has to be allocated. The volume also has to be spread across strategies that have got differing success rates and over different time frames. So if you haven't got trades if all your trades are expiring in 192 days, it's going to be really, really hard for you to go, how much am I going to make this week? Because what happens if all of those trades that are designed to expire in 192 days don't work this week? So duration.
Where all of your capital is in credit spreads, bull put spreads on SPY whenever the coronavirus makes the market fall through the bottom, and they expire within 2 weeks. Yeah.
Well, this is when it all becomes one of those things. Recency. This is another problem that beginners have. There's recency, right? So the market corrects. What do beginners do? They go, it's never going to come back. Bang. And they just start panicking as if this is the end of the world. They look out their window and they're imagining the 4 horsemen of the apocalypse coming over the hill. These guys are suddenly, look, when the coronavirus struck and there was like a 3,000 person line outside Costco just to get toilet paper, right. I never imagined that Revelations in the Bible would have defined the end of the world as being a hunt for toilet paper. I would never have got it.
I still don't understand toilet paper of all the things. Of
No,
all
I
the
think I
things,
get it. I think I get it. I sort of worked it out that
explain it to me, Chris, because I don't get it.
this is called third world logic.
Okay.
It's the end of the world.
Yeah.
Everyone is going to crap themselves. We don't want to do it in a mess. You need paper. I found it really crazy that, toilet paper I can get. You know what? Once you found your brand,
Yeah.
I'll tell you now, once you found your brand, you don't want to go back to those hard industrial brown paper towels that you get in the public restroom.
Oh, no,
Can you imagine that? It's like sandpaper.
That'd
I
be
want
terrible.
soft and cuddly, man. I'm a charming kind of guy.
So you were a toilet paper hoarder, weren't you? You were one of those guys.
My wife is a big fan of Costco's toilet paper. And when Costco puts a sale on toilet paper, she'll come back with like 5 or 6 of the 24s.
Yeah, but that's normal. You catch a sale, you get a little extra. But
what was really bugging me, though, at the beginning of Corona was all those people taking the hand sanitizer and then putting it on eBay for 25 times more the price.
Right.
That was crazy, man. That was nuts.
Somewhere there's a giant, there's someone sitting on a giant warehouse full of toilet paper that's absolutely worthless right now because we didn't have a toilet paper shortage for very long because you realize that there's more toilet paper. I just, you walk by the things and I'm looking at all the things that might actually be useful in a survival situation, like maybe a water purifier type thing, or some salt or some batteries. None of this stuff was gone. Yeah, no one was thinking long term. It's like all the only things that there were runs on were paper products like napkins and toilet paper, and then frozen pizza. And I'm like, no wonder, because if you sit and eat all that frozen pizza, you're going to need a lot of toilet paper.
Down at our store, down at our local supermarket, they had little signs saying, 2 per person and 1 per family and everything, and all of that stuff. I mean, it's quite nice to see that, the end. I think the end is near on this whole thing. It's still going to be another 6 months though until people like me get a vaccine. And how many people get the vaccine? The talk now is going to be about this vaccine passport and whether or not, you're going to be restricted in what you can do if you haven't had this vaccine. So I don't know. I think we're going to find a whole new line of anti-vaxxers come out now. It's like they're going to evolve. And, it's so ironic. Oh, they're going to put a microchip into you, blah, blah, blah. But they've been tracking you on your cell phone for the last couple of years.
That's true. That's true. The people, I mean, there's not been privacy for some time. But so, okay, let's talk a little bit about some opportunities that you see coming up here. So do you have any, say over the next couple of weeks, what are you looking at?
Yeah, a couple of things. We've got a legacy trade that's been happening. I'm going to share my screen so we've got some graphs that we can put up. So one of the trades that we've been in for a while that we're hoping will turn around is obviously this one. This has been an absolute dog. Absolute dog. I feel so bad for having picked this one, but
downward channel there.
Yeah, downward channel, and for the first time in maybe 5 months since back here. Since July, I see this as one of the heavy pre-market buying stocks. So have we reached the bottom for Harmony? Is this going to suddenly explode? There is about 54,000 contracts open up at 5 for the January 15 expiry. And I've got a feeling that we could see this thing run up to 5. So this is something, worth looking at. Not, I'm doing it for a different reason. I'm just trying to break even. But I think if someone looks at this and goes, maybe this could be a good thing. You can't get more bearish than this. I mean, these big red patches of selling is just, it's too much. We've got this bullish crossover coming over here on the stochastic. This is pointing up. I think that there could be something here. I would probably say that this is a high risk trade, but it's something that I'm definitely looking at.
So have
Here's
you
a
been
couple.
averaging down or
I have been, yeah, I have
pulling some
been.
calls against your
I've been
long?
buying a lot of cheap calls in the expiry that I've got, which is the Jan 21.5. I mean, if you look at the open interest at that level, there's 53,000 contracts open. The next strike up at 6 has got 4,000. And you know how open interest works. It works like a magnet for prices, right? So obviously at the 5, we might see the price getting pulled up to the 5. So something to keep your eye on. Here's a couple more. We did a trade yesterday in NVIDIA. We bought a call option on NVIDIA yesterday for this Friday. Let me pull it up. We actually no, for next week we bought the 550. I mean, there's 550, which is the top end of the Bollinger. We can see this compression starting to form. If you look over here, how this Bollinger is sort of compressing into this price. This is usually a precursor to an explosion in price. So what we could see is possibly another rise like that or like that. I mean, this stock is just, it's phenomenal. I mean, could you imagine, you know, you buy over here and every time it hits this moving average, you just pick up more, pick up more, pick up more. You would have done so well this year. So we've done the 550. We've bought the 550 call. That position is up 42%. Since yesterday, since we bought into it. So I really like NVIDIA. I like this multiple top that we have forming here. I think the stock is going to attack this line again and possibly break through that. So NVIDIA is another one to look at.
So it's just been consolidating since September, ready to kind of
This kind of action here is what you want to be seeing if you're looking to do sort of bull put spreads. You know, this wouldn't have been good for long calls except over here and over here. But bull put spread somewhere around the 500 mark surely, you know, would have paid off handsomely, you know, from September through to now. If you'd be selling them just underneath the 500, get yourself some time, get the premium. Don't do naked puts on this one, though, because if you get a sign, that's a chunky piece of cash that you're going to have to put out to buy the stock.
It's not a cheap stock right there.
The other one that we have is Twilio. We've got a call spread on Twilio, so TWLO. Again, I really like this. Look at this trend that's forming here. Right in the wedge, in the channel, going up. We can see a little bit of compression. It's coming out of this compression here. There was the compression. There's the explosion going up. We could probably see this getting up to around the 380, 390 mark. We've got the 16 April 340 and 370. So we're sitting.
I've got two trades. I've got two positions on. I bought an at the money bull put spread.
You've got a bull put spread as well. Yep, that could be done as well. As long as you see, the thing with bull put spreads is you've got to look for that. This is where bull put spreads become really good. Strong trending stock, and then this chop. That's the signal to do the bull put spread. Not here. We don't want to be doing it there. We want to be doing it sort of in that area here. We can see that there's some strong support around the 300 line. Obviously, selling the 300, you're not going to get a lot of premium if the price is up at 352. But taking a 32-day view and looking at momentum certainly being in the stock's favor, we can see momentum in the favor of the stock. You know, selling a 345, 350. That would probably.
I sold. I can't remember what my position is actually at this point, but I've got 345.
Yeah, fantastic. I think you'll do well on that one. Here's another one. We went into this stock. We got a signal on the system. I'm just going to look up the date that we got this one on the 7th of December. So around a week ago, I would say 1, 2, 3, 4, 5, 6, 7. Right about here. This little movement, the two reds and then the white, the green, and then the green. Over here, we have a buying opportunity. We can see it was in the trend, in the upper reversal channel. We like that. Plus, lots of buying. We can see a lot of accumulation happening on the stock. I think we bought that on a heavy buying day. We went in with the 10-15 spread for June. 10-17.5 for June. That position is up around 60% now. And we bought a replacement trade yesterday for the January. We brought one in, January 2022 for the 12.5, 25.5. And on that basis, the combined position, we're up 21% so far. So in 7 days, there's another 20%. I'm just looking at the book at the moment and seeing what we've got. Let's see. Right, we've also got a position in Baidu. I mean, I still like this. There's quite a lot of talk at the moment around the delisting of certain Chinese stocks over the next couple of years, and that's going to be, I think it's a good thing. There have been a couple of incidences where Chinese stocks have misreported some of their numbers. It's really, really hard from a
so much oversight.
Yeah, it's difficult. I mean, Luckin Coffee was a disaster. I mean, they had been falsifying. I mean, how do you falsify people buying coffee? Like, I mean, it's just, crazy. Anyway, long story short, guys were in it. I was in it. Terrible stock. I had to write that one off. But it was a function, I think, of the fact that these guys in China might have a little bit of a laxed environment when it comes to the financial oversight. And I think it's a good thing. I think the American market is so liquid, and some of these companies might not be appropriate for a lot of people. So I don't know if Baidu is on the list to move out, but we'll see what happens. But look at this. I want to show you something here. We can see this compression starting to happen here. We can see this buying starting to happen, but the price is not moving much relative to the buying that's taking place. This is such a key signal. Look at this. You have these three almost doji-like candles over here. And this, to me, together with high buying, signals this is going to pop. It's going to go up. It went up. Look at the buying that's been taking place here. There's definitely more green than red over here. And look at this explosion in price. So it's almost like this stored energy. It's like this kinetic energy that's storing there, and then bang, it just goes
like
up.
a video game when you hold the button down long enough and you get that glow. And
I get the same thing in Jiu-Jitsu. If I hold my breath for a long time, I just explode, It's like, just make sure you don't eat a burrito before you do it. That's not a good idea. So here with the Baidu, we have some shares. We bought a long call option, and we have a spread. And together, the combined position, the long call is up 55% since we bought it. So the long call we added here, up 55. The shares are up 4, and the spread is pretty much flat. So combined, we're up 22% in the last couple of days on that trade. But this to me is one of those trades that, once you see this kind of compression starting to happen, together with buying, together with this sort of rise in the stochastic, man, that is a method. That is a signal to tell you.
That is a nice chart. Some nice.
This is awesome. So the fact that it tracked here for a long time, it just sort of grinded its way up. I mean, that's not really good for long call buys. It's not doing enough. But this here, I mean, if you'd gotten in sort of second last week of November, I mean, you would have gone in at 134. You're up now to 169, even if you'd bought the shares. That's fantastic. Once it hits this blue line here, every time it hits the blue line, it comes up or it tracks. There's a nice move. There, it's a nice move. There, it's a nice move. So one thing that you have to remember with stocks is symmetry. There's a repetitiveness to the way in which a stock behaves. All right. I'll show you another one that does this.
Yeah, you were mentioning that the other day when I was doing a webinar with you about looking at the past. The past tends to repeat itself with the particular stock patterns.
Yeah, so Peloton, same thing, it just tracks. Every time it hits the 8, bang, bang, it gets bought. Every time it hits the 8, you could just accumulate this. It falls down, hits the 8, comes up. Look at that. That's fantastic. Then it comes down. I think this was the vaccine. They said, oh, we've got the vaccine. Bang, no one wants to ride a bike anymore. Okay. But this is the sort of thing you need to look back and see that this stock has trended really strongly along this blue line, and now it's doing it again. You know, this is an easy one.
People have a bike riding habit that the vaccine's not going to cure, even when they're not a.
Oh man, I just want to get back on the mats. You know what? If you came to me now and said I had to do Joe Rogan's Fear Factor and I had to eat a scorpion and then do something else, I'd probably do it if it meant I could get back on the mats. I'm just like, I'm getting that anxiety of not choking people out, man. It's crazy. It's nuts. So the thing with the trades at the moment is I think there's more trades than we have money. Definitely. So one thing that we could look at is if you just do a simple screen on just, you know, stocks that are gapping up, these would be the stocks I would be focusing on, or stocks that are strongly trending, stocks that are gapping up. You know, very, very simple screener here in Finviz. Great system, by the way. If people are looking for a really easy way to identify stocks based on patterns, this is probably one of the easiest and cheapest ways to do it. You know, Apple, you know, such huge volume goes through this stock every single day. Sometimes it's more widely traded than the S&P 500, the SPY.
It's very, very liquid. I know I did a couple
liquid.
of trades on Apple.
But this price does nothing. Doesn't move a lot. There's not a lot of price movement. So for someone buying a long call here, I don't know if that would be the right trade. Buying some stock and holding it, possibly a better idea. Disney, what a move last week. This was amazing. You know, came out. I have to say, I'm a subscriber to Disney Plus, and I don't really like it. I don't understand what the appeal is.
I've heard different opinions on that. Some people are all about Netflix. Some people are all about Amazon Prime. It's like everyone has, like I've subscribed to all of them, and I'm like, sort of, I don't know. There's a few things on each one I like, and then but they're not all that great. You can't.
I'm a fan of. I have all three as well, and I tell you what else I've got, which is really nice, which is an app. Is a thing called Topic. I don't know if you've heard about it, but it's all these independent shows. It's not this mainstream budget stuff that you get from the big studio.
I'm going to jot that down.
But I've got this thing about Scandinavian dark series because I love these criminal suspense dramas, and when Scandinavians go off the edge, they go off the edge, man.
What's the vampire movie that they redid in the United States?
The Bridge.
Is that there was one with a girl? It was like I can't remember. It was really creepy. It was a Danish film maybe or something, or a Swedish.
The girl with the dragon tattoo?
No, I can't remember the name of it. But anyway, it was kind of creepy. I saw the original and then the remake. It's like they had to tone it down for Hollywood. You know, it's like Hollywood sanitizes a lot of things, and they're just. You know, they're not.
I find Scandinavian noir, and you know, especially if they're speaking Danish or if it's got. I just think Danish, Swedish, Finnish, even, and Norwegian, sort of come with this. Man, it's just such an interesting language because I'm reading the subtitles and I'm trying to pick out words and like I just can't. And you know, they've got some really good things. So on Topic. Fantastic shows. Shout out to Topic. They've got some really nice series in there that aren't these big budget things with super effects and what have you. It's good. But Disney for me, it's been a bit of a mixed bag. I don't know. I like the National Geographic stuff, but we get that on the other channels anyway.
Right.
Amazon Prime, though, I'm a big fan of Amazon Prime. The nice thing about Amazon Prime is if you click on one of your, you know, like if you click on a murder series or something, they can dredge up murder series from long ago that are just, oh man, I've got to turn it off.
Pass all the information along, and now you're being tracked as a potential serial killer.
Like this Facebook thing with those damn ads, man. I'm telling you. But I like it. I think Netflix has got some serious competition from Amazon. Like really, Amazon Prime series is good. They've got some nice things in there. Anyway.
Yeah, I have Amazon Prime as well. I for a while there, I canceled my Amazon Prime because I'm like, I don't order enough stuff to to make it worthwhile. Because I mean, it's not that much money, but I'm like, I don't really like the shows. Why? I just don't want to pay for something I'm not using.
Yeah.
And then now I got to order everything because everything is closed. So I started back up, and I'm like, it's going to be worth my money, worth my time to order everything now. And then I'll just turn it off, maybe probably when all this crap is over with.
Well, looking at Disney, I don't know so much. I just look at the charts. I don't really care about their business, to be honest. I like that move that it had. And I think, look at that big price movement up, consolidation back. Can this get back into here? I would probably say that there'll be some profit taking at some point. It hasn't had as much volume. If you look at that, that is huge volume. So worth looking at on a day trade. If there's still buying going in, if this can see another green candle going that way, you could probably trade this up just above this pink line. But I wouldn't be doing this on the long term. I think long term, this has to get back towards its moving averages. This was a big move. It was a really big move. And that saved the Dow. Last week, this was the only reason the Dow was positive. It was saved by Disney. Microsoft, great trade. We've got a long-term trade in this. I like Microsoft. I think that this is going to attack this wedge. It's going to go up. I think it's going to get up to the 240. We've done the 205, 250 call spread for June. Just looking at the implied move, the expected move for June for Microsoft is $39, $40 from here. So market's already saying this stock is going to be at 254 by June. So if this is at 254 by June, my 205 call option is going to be worth, let's see, $49, and it's currently trading at 22. So that will be a pretty good buy if the expected move happens. Nvidia, we've talked about that one. This is a great stock to hold. The Qs, I like this trend. It's great. Look at the buying that's going on. And this is the thing, traders need to look at is there's so much buying going on that I don't see this falling all the way back down. A lot of this stuff is sort of funds repositioning for the next year, all of that kind of stuff. So I would just be buying this and holding it, even taking a long call option on QLD or on TQQQ, which is the double or the triple, and just holding it and seeing where we go. SPY, again, sitting nicely within the range here. Keep holding. Here's TQQQ. I think that we're going to be seeing a breakthrough at some point within the next week or so. Taiwan Semiconductor, I don't trade this one very often, but a nice looking chart that we have here. You could see there's this compression that's starting to form over here, and possibly we can see a breakout forming. But yeah, I would be looking at stocks that are gapping up, prices above the 20 on the day trade basis. We can also be seeing things that, particularly stocks that have got high short interest. If you're looking to do longer term sort of trades, you need a catalyst. All right. So this is another thing when you're doing longer dated trades. If momentum is in your favor, try and look for stocks that have got high short interest. And high short interest is anything above 10%. Look at this. If we look over here, 31.73% short, this is going to cover, because what happens is the shorts are putting in their stops at these points, and when these points get taken out, prices tend to get, they start moving up because they've got to cover their position. So look for these opportunities as well. You can see compression starting to form. Bang, there's this explosion that comes up. So anything where you have the Bollingers compressing in towards the Keltners, that's the compression we look for. Indicator is called the TTM squeeze, and I think you can get it pretty much on most of the charting platforms. Stock Charts have got it. Trading View has got it, and that's what I use. I look at it across different time frames. If I can see that this stuff is going to pop in one direction or not, you buy a call option. Once it starts to pop, you can add your second contract over here, maybe your third contract over here. This looks like the trade is probably turning a little bit. This is maybe an exhaustion play now down here. Take profits on the calls going up, maybe buy one put, keep one call, make a straddle, see which way it goes. You can play the charts. You've got to write this down before you do it, because in the moment, no one's going to be able to decide what to do. So
right.
Lots of opportunities. I think the way to play the market at the moment is keep the position small, don't oversize, play each chart for themselves. Don't let the sentiment or what you read dictate your position. Let the chart dictate your position. Don't fall for the news. The news guys like Kramer and all of them, they get off on the negative, right? So I don't pay much
Just more
attention
like
to that.
it's more like entertainment. I know I've seen a couple of like kind of like the monkey study about the analysts, and they did a meta analysis of analyst picks, and it was like 50% or something.
You know, one thing I don't think the market should ever forgive Kramer for telling people to stick all their money into Lehman's and Bear Stearns just before they went bankrupt. You know, that was probably the call that he'll never forget. And the thing is, take your advice. The best person to give you advice is you. That's it. No one else. Not me, not anyone else. Best person to give you advice is you. So make sure you have a process, a method. If someone gives you a stock, go in and look at it according to your process. And if it still meets your criteria for doing a trade, then do the trade. Don't sit back and just blindly follow, your buddy at the barbecue because he said so. So
Well, I'm a big fan. I'm a big fan of the idea that if you want to learn how to do anything, you need a coach. That's why when I started to trade, I came to you because I knew you were really, really good at it, and I want to learn. I want to learn from the best. So that's
I don't want to give myself a bit of shameless self-promotion, but going to people who've done it before who have failed, and I've failed, I've failed many, many times. There's no point in you going through the same learning curve. Like why would anyone want to do that? My learning curve was horrible. I didn't have anyone to teach me. I had to learn this for myself because everyone who was teaching me or I was reading wasn't giving me the whole story. If someone's going to teach me a strategy, teach me how it can go wrong. Don't just tell me how it goes right, because going right, the trade will take care of itself. Going wrong, you need to know your shit.
well.
And
That's something that I was just rereading Market Wizards the other day. I'm still currently doing it, just going back through, and it's like the one common thing is like all those guys in there just destroyed themselves at the beginning, and they didn't quit. They just used it as a learning experience.
yeah,
All the top people.
you could easily just quit. The first loss, most people do give up. The thing is, don't give up. And if you understand allocation right up front, those learns become very, very valuable because you're not losing everything. I lost a lot. I didn't know the allocation rules when I first started.
Mm-hmm.
No one told me 1% or 2%. They just said, just throw money in. And they didn't tell me what to do when things went wrong.
Not at all. It's all or nothing.
Go black, man. Bet on black and never go back. I mean, it's just this is the best bit of advice that I can give anyone who wants to do trading is know yourself. Know yourself, because there are methods out there that work. Everything works. Everything works. When you see an ad on Facebook and says, I do this and I do this, everything works. No one's better than anyone else. It's a zero-sum game. For those guys to win, someone's losing. So everything works. What works the best is pick a system and stick with it. But pick a system that works for you. Don't pick someone else's system. Take what they do, test it. Does it work for you? How do you feel? Okay, I'm going to do that system. I'm going to try it out. Give it 60 days. Check your results. And if your results are below the norm, and if people want to know the norm, they can always give you a call and we can tell them, then you need to adjust things and you'll see where you're going wrong and then you can fix it. But you can't fix what you don't understand. Number one, I don't try to fix my car. I'm not a mechanic. I take it to an expert. So this is the reason why you need someone just to hold your hand. And I don't really want to hold hands with people for a long time. It's get them up the curve, get them riding the bike, take the training wheels off, and then they've got to do the things for themselves. The traders become successful when they're not reliant on people. So that's where I am now. I'm not reliant on people. I'm looking at.
You want to teach people to be independent,
Absolutely.
and then touch base with you afterwards. But
yeah, I want people to be able to trade for themselves, know themselves, and have a skill that's applicable to anything. Like trading, once you have it, you can't lose it. It's like a jiu-jitsu black belt. No one's going to take it away from you. You have it. Even if you wore a white belt, you're still a black belt. And that's what trading's all about, you've got to get that right. So, hopefully we'll see where it goes. Have a great week in the markets, Brian.
Absolutely. Next week is Christmas, and we have to adjust the schedule somewhat and maybe do it on another day. But hopefully we'll get a show in next week and have an awesome week, Chris.
You too, man. Keep banking the profits, buddy.
I will.
All right. Take it easy, man.
See ya.
See you, mate. Cheers.